Hi and welcome back to Cheeky Crypto. My name is Nick, and today, guys, we're jumping down into the charts for Bitcoin, taking a look at what has been going on most recently and what I would expect to happen next. As I get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe? Tap the bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, link is in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there, so why not go ahead and check that out today. And if you are looking for just a little bit more from the crypto space, why not check out our new podcast? Link is in the description down below, and again, it's easy listening for whilst you're driving to work, keeping you up to date with all the kind of latest of what is going on with crypto. Okay guys, let's waste no more time. Let's jump right down into this, right? So here we have Bitcoin paired up with USDT. We're on the hourly chart and Binance is the data source. Now, I'm expecting approximately a 20% bump upwards in price for BTC, but we shouldn't get too carried away or too excited about this, because essentially I think that would actually mark the end of a corrective phase up, and then we continue our correction to the downside. And I'm going to go through a little bit of this in this video. Obviously, yesterday we were talking about a zigzag pattern, which essentially is a 5-3-5 structure. Okay, so we have 5 waves coming up here, then we have 3 waves coming down over this side, and then we have our 5 waves up this side. Okay, so essentially that's kind of what that's looking like, and for the most part we are still inside this 3-wave corrective move to the downside, just within this little B wave down, and we've got a couple of options here. So we've kind of got the ability to continue a push up, or we can pull back down. It can actually go either way, and one of the things that we're looking for here is confirmation of the direction. So if we go up higher than this little move here, which would be about basically 20,900, then I'm inclined to say that we probably are looking to start our next 5-wave structures upwards. Okay, and the reason for this is that we actually have a low point just down here that was lower than this area. So we had this bounce up to 20,900, and then we came down lower than the W wave. Okay, so this could technically mark the end of our Y wave, and we could actually be done with this correction. So for example, our W wave could end here. Our X wave bounces to the 20,900, and then we pull down towards 19,777, right, as that low point, and then we start to progress on up with a 5-wave structure. Now, that's possible. However, it'll be unusual. Normally, you would expect a 1-to-1 ratio. Okay, so if I grab hold of this, move it over to that 20,900, then actually our Y wave theoretically should come down to 19,196, which would mark the end of our B wave corrective move and start our wave 1 to the upside. Okay, now so that's kind of what's going on there, right? We've got a couple of options. We've either finished it already, which if we cross higher than 20,900, I'm inclined to think that we probably have, and then we can just kind of ride this up a little bit longer. If, however, we start to pull back down again, we might find ourselves with a subwave count just inside here, also then taking us down to those lower ranges. So again, a couple of options, but one way or another, within the next few hours, probably by the time this video has gone live, we should know whether or not we're moving up or moving down. Okay, I think that's going to be pretty consistent there. So that's kind of what's going on right now with that kind of immediate kind of outlook there. So what I'll do is I'll remove this, and our lows are 19,196. So if I now zoom up a little bit, right, just take us a little bit out, you can kind of see what our expectations are. Now, if I take this high point of our 5-wave structure to the low point of our 5-wave structure, so this entire 5-wave move, or the zig, and then of course move this over to our 19,190, then essentially, we are talking about this high point, right, which I have got marked up here at $23,624 as a 1-to-1 ratio, and that would complete the zigzag pattern. There would effectively be 3 waves up, okay, with 2 waves down. So you'd have wave 1 down, wave 2 down, and wave 4 going down, just here. And then of course you have wave 1, wave 3, and wave 5 going up. Okay, these are called motive waves. There's 3 motive waves and 2 corrective waves inside the 5-wave structure. And essentially what you've got here then would be a 5-3-5, and the 5-3-5 is our zigzag. Okay, hopefully that makes sense. And then of course, you know, that takes us up to that high point theoretically of $23,628. Then all of that is actually a corrective move within our 4th wave on a macro scale, right? So if I jumped up into our 8-hour chart, okay, and actually the 8 hours probably a bit too far. Let's jump to the 4-hour. There we go. So on the 4-hour chart, what you can do is you can see that we're tracking this 5th wave down low, and it's based on how high our 4th wave goes, right? So the 2 waves relate to each other, right? So we have a wave 1, wave 2, wave 3. Wave 3 has a 5-wave structure in it, okay, which means it's an overextended 3rd wave, which is, you know, it's an interesting one. It is the overextension wave, and it is possible that we pull back down. Now, a wave 4 and a wave 5, the higher that wave 4 goes, the lower that wave 5 goes. So, yeah, if we go to 23,625, then our lows for our 5th wave come in about 14,600 to a high of about 16,500, right? So we have that little sweet spot just down here. And that there, I would actually then be looking to say would be the end of our corrective move, because it would be marking our 5th wave of a 5th wave. And inside this 5th wave down on a macro scale, we have 5 waves. Okay, inside that 3rd wave, we have 5 waves. And then basically we are currently tracking the 4th wave of a 5th wave with a 5th wave to come down. So once we hit these lows, we are effectively at the 5th wave of the 5th wave on this kind of scale, which effectively means that this is most likely going to be the bottom of the corrective move. Of course, there are some caveats to that, which obviously means that you know, there are some wave counts that could happen here that might mean that we drop down lower than this. Although with an overextended 3rd wave, I would be less inclined to think it's possible, or less inclined to think it's probable. It's definitely possible, it's just not probable in my opinion. You don't normally have 2 extended waves. Now, it is possible only because Elliott wave rules within crypto is a little bit different to the stock market and how it's kind of been derived. I think we have to... there's hard and fast rules that can't be broken, and then there's expectations. And I think the expectations are slightly different within crypto than you normally would find within your regular kind of, you know, stock market Dow Jones kind of scenario. So I wouldn't say it's impossible, but I wouldn't be expecting it. It's not something you would expect within Elliott wave theory to have an overextended 3rd wave and then have an overextended 5th wave. But we in crypto, being the fact that it is a manipulated market, you know, I'm not going to rule it out. So we'll watch out for that and we'll see how it kind of plays out. But for the most part, I wouldn't expect that to happen. Therefore, I would expect 14,600 to 16,500 to kind of be the area of the bottom. Now, as I come up into our Bitstamp data and we take a look at this on the weekly, again, this is an area that I think it's worth kind of noting. Now, I'm not going to talk about the averages. You know, I'm not a big fan of them anyway, but I do want to bring the Gaussian channel up. And the Gaussian channel effectively is glorified moving averages, but with this on a weekly time frame, it does actually give us some interesting perspectives. So, you know, we actually have this Gaussian channel back in 2018. It turned red as we descended down. We had a small bounce up and then we finished off dropping down lower. And within this area, what we can acknowledge is effectively we actually came down to a 1.236 extension on a bounce. So if I just take this, we can go A, B, C, the C being 1.236. So 1.236 is really important for a couple of reasons. But if I actually do the same exercise on this recent corrective move, then actually we've already overextended 1.236 and head into 1.382. So again, we've kind of done things slightly differently than we would normally, but do understand that, you know, we are potentially just going to pull back down ever so slightly lower, and maybe we will we'll lose that 1.382 ever so slightly, but we're not looking to come down to 1.618 or anything like that. Historically, that's never happened. It is possible, but it's, you know, it's not something that we've seen yet. Now, the reason I'm talking about the Gaussian channel, though, is really the amount of time that it's taken from this Gaussian channel going or turning red and then actually hitting the bottom. Okay, so we actually have a time period here. So let me grab hold of my time period. So we turn red at this particular point, and then we hit the bottom just about here. It's about 42 days, okay? So about 42 days when this Gaussian channel turned red, we actually saw the bottom. Now, if I come over to our 2015 bear market lows, or 14-15 bear market lows, from the moment that we turned red to where I hit rock bottom was only 28 days. So it was actually a little bit quicker. So over the time period, actually, we're seeing a little bit of a lag. Now, if we come to where we are right now, and I grab hold of our time range, we can see that we've been going for 28 days. Now, if we were to kind of extend this out a little bit, we are probably talking mid-June, mid-July, and by the time we actually probably find the bottom, which means we're just in the bounce right now, and we're potentially looking to come back down. Again, finishing those lows at about that 14,600 through to about that 16,500, right? So reasonably lower, and I do expect that to be, let me actually just check. Let me just grab this and move it over. Yeah, we are basically talking about maybe getting a bounce on that 1.618. I wouldn't be surprised if that is what happens here on this this particular occasion. Now, the issue that you'd have and the support that you'd have for a really big bearish scenario would be that if you do hit that 1.618, because what you'd have here would be a potential 5-wave structure taking us down lower towards maybe $10,000, right? But a significant bounce should happen beforehand. So you'll probably find that a lot of people might be calling out, you know, the bottom is in at this particular point, right? And I think that's a true possibility. Just because you have this theoretical 5-wave move doesn't necessarily mean that it is something that is going to play out. I do think it's important that we acknowledge the structure of the 4th wave and what the 4th wave would do. So can I actually click this? Yeah, there we go. Let me just change this color because it should be yellow. There we go. Make it a bit easier to see. So that 4th wave is not allowed to cross wave 1. So we'd have invalidations, we'd have these things that we'd watch out for, and we'd see how that would play out. And if we don't, then yeah, the expectation would be that you would pull back down into those lower ranges. And as I said earlier, right, on the micro scale, wave 4 and wave 5 relate to each other. We haven't got any overextensions here either. So if we do come down to 1.618, and we hit those lows and we bounce from there, that's going to be the concern, because that would basically allow us to really take a look at this entire structure and think, actually, we've got scenarios now that we could look at this as a $10,000 BTC, maybe even lower than that, and you really do have a severely distraught crypto space at that particular point in time. With that being said, it'll be a real interesting kind of spot to kind of watch and see how that plays out. But again, just because you hit 1.618 doesn't guarantee it's a 5-wave move. It gives us a high probability of that, but always watch out for those invalidations. So yeah, we'll be watching out for that. If the structure here is going to be long-term bearish, then yeah, I'm not hopeful that actually 2022 is going to get the reversal. If, however, we can avoid going near the 1.618, or too close to it, like maybe we just come down to that 15,000, I think that's okay. And there's a higher probability of reversal when it's just an overextended C wave, for example. So we'll keep an eye on these things. Essentially, we don't have 5-wave structures, right? So it's not an impulsive structure in the way that we have over here. You've got like a 5-wave structure to the downside. Instead, what you've got is you've actually got a corrective structure ABC, right? So if anything is going on here, I would actually expect it to be more of a 3-3-5 structure, where we are actually finishing off with a 5-wave move, and therefore there is no further downside to it. So I think it's important that we acknowledge that. I can't rule out a 5th wave drop to $10,000 just yet, but I also can't say that it is a structure that we should be concerned with either, because we haven't come down to those lows just yet, although those lows I think are something that we should be concerned with going further forward in the future if we actually have those final 5th waves down on the hourly chart, like I've been talking about for a few weeks now. So essentially, yeah, there's a few things that we want to be kind of thinking about in the background background. But essentially, I do think that we are coming very, very close to the bottom. I do think that the Gaussian channel historically has been a very good, accurate representation of where the value is. And if we are to drop down, it could just be a simple wick where we hit those lows and then we move rapidly back to the upside. Something similar to what happened over in the COVID-19 crash, for example. So yeah, we should be concerned, or maybe not concerned is not the right word. Maybe I guess mindful that there is potential room to the downside to be had, but we haven't confirmed that through the right structures just yet. So make sure you're subscribed, tap the bell, and stay informed with all the updates that we do here, so I can make sure that you are aware of what I think the most probable outcome is over the next few weeks, at least anyway. So guys, I'm going to leave the video there. If you have found this useful and informative, hit the like button. I really do appreciate that, and I will catch everyone in the next one.